Yes, good morning students. Today we are going to discuss about the accounting treatment of goodwill of chapter 4 change in profit sharing ratio. First, accounting treatment of goodwill. Accounting treatment of goodwill. First, when existing goodwill is written off, means whenever you are giving the goodwill in the previous balance sheet of the last year balance sheet, then what would be the journal entry? All partner capital account debit to goodwill. Whenever you have to written down, you have to write off the goodwill in the previous ratio, like in old ratio, then the journal entry would be all partner capital account debit to goodwill account, the goodwill which is existing already appeared in the books. Second point, second topic, when the existing goodwill is carried in the books of accounts by all the partners, means whenever all the partners carried their goodwill in the business, then the effect is the value of goodwill would be increased or it would be decreased. So it depends from the partner. Whenever they are going to carry out their goodwill in the business, then it would be increased or decreased. And the third topic, when goodwill is adjusted through partners capital, means whenever you are going to adjust the capital through your account, then the journal entry would be gaining partner capital account debit to sacrifice partner. As we have discussed earlier, we have to first calculate sacrifice ratio and gaining ratio. Then the gaining partner would be debited and the sacrifice partner would be credited. Then the entry would be gaining partner capital account debit to sacrifice partner. Then the second point, when goodwill is raised and written off, means first you have to raise the goodwill and then you have to write down. First raise the journal entry of the raised goodwill is goodwill account debit to old partner capital account, means whenever you have given the previous goodwill, then first you have to raise in the old profit sharing ratio, that means goodwill account debit to all partner capital account, and then you have to write down the goodwill, write off the goodwill, then the journal entry would be partners capital account debit to goodwill in new ratio. Whenever the partner decided to change the profit sharing ratio, then this return off would be in new profit sharing ratio. So these are the journal entries relating to accounting treatment of goodwill. First, when existing goodwill is written off, then existing goodwill is carried on into the business. Third, when goodwill is adjusted to partner capital, and fourth, when goodwill is raised and then written off.